Asian Healthcare Fund, a private equity firm floated by Dabur Group Chairman Dr Anand Burman and former Dabur Pharma CEO Ajay Kumar Vij, invests in healthcare and life sciences sector in the country. AHF, which has raised around 38 million in its first fund till now, has made 2 investments this year. Earlier in April, it committed rupees 40 crore investment in Mumbai-based Total Dental Care Private Limited, which runs My Dentist chain. A few months later, it invested close to rupees 22 crore in Wellspring Healthcare Private Limited, which runs primary healthcare clinics in Mumbai. VCCircle caught up with Ajay Kumar Vij, the Chief Executive Officer of Asian Healthcare Fund, in this rare conversation, who told us that he is planning to start the process to raise a second fund and why in the future it could become a challenge for investors to get good exits from healthcare sector. Welcome to VCCircle. Today we have a very special guest with us, Mr. Ajay Kumar Vij, the CEO and co-founder of Asian Healthcare Fund. Mr. Vij, thank you for joining us at VCCircle.
Pleasure.
For starters, tell me about the genesis of the fund and how it started and the rationale when you went about starting the fund.
So, as you know, in my previous life, I worked and ran what was called then Dabur Pharma Limited.
Mm-hmm.
After we sold the business in 2008 and got free from our responsibilities in 2009, we looked at possibility of remaining in healthcare and finding opportunities in healthcare to invest in. But coming from the experience of investing, having built a business in healthcare, we felt that there is a need gap, particularly for healthcare, for investor to have domain knowledge, to do a better job of the investing in healthcare. And with that as the seed, we thought of setting up a private equity fund, and thus Asian Healthcare Fund came into being.
And who are the leaders of this fund?
The top management consists of, from the executive management, myself, and we have 4 other senior people. 3 are positioned in Delhi. So there is operating partner and CFO Shailendra Tandon, who has been CFO for Dabur Pharma earlier and has a long background in healthcare. Then there is Dr. Preet Thakur, who is a medical professional and a private equity professional post his medical degree. He is part of the team. Then there is Sameer Bagle, who is a pure play private equity professional. He has healthcare experience previously, but his input is to bring the private equity perspective to pure healthcare domain specialists, if you like. So that's the core team that we have. Then, of course, there is overall guidance of Dr Anand Burman, who you all know very well.
And what would be your focus with this fund? You said healthcare. So, are there any specific parameters in healthcare that you're looking at focusing on?
No. What we believe is that across the healthcare spectrum, there are opportunities in every vertical of healthcare. However, the fact of the matter also is that within the whole healthcare market, which is currently give and take about $65 to $70 billion, 60% of that market is healthcare delivery. Rest is all divided between pharma, devices, diagnostics, etc. So, largely the opportunities would arise in the delivery segment, and incidentally that's where our first investment also happens to be.
So, would healthcare delivery be somewhere of a favorite in the sector, or you'd be very completely unbiased?
We will be unbiased.
Okay.
Because our parameter is not to we bias towards a segment just for the sake of it.
You are at present raising your first fund and you're about to close it?
We have done the first closing of the fund.
Okay.
We will shortly be doing the final closing of the fund.
Mm-hmm.
And idea after that is to invest the monies and then go for an international fundraising, which will be a larger sized fund from where it is.
So what would be the corpus of the first fund?
Well, the current corpus is today in the region of $38 million.
Mm-hmm.
So depending on where the final closing lands up, will be thereabout.
And the international raising, that would be the second fund.
Yes.
When would you start raising that fund?
In the second half of the current year.
The second half of the current year. And are you aiming a certain corpus size of that? I'm assuming be larger than the first one?
It will be larger than the first fund, and we are working out the final shape of that fund, and I think in a few months we'll be able to share more details on that with you.
Mm-hmm.
But of course it will be larger from the current fund size.
And what kind of LPs are there who have invested in the first fund and that you would be targeting the second? Are these institutional investors?
So the current fund is an Indian fund, is a SEBI approved fund.
Okay.
So first of all, there is no international investor in the fund.
Mm-hmm.
The Indian investors are a combination of institutional investors, high net worth and ultra high net worth individuals and family offices, and of course our own commitment in the fund.
Okay.
So the next fund that we will raise would be also a combination of international investors from institutional side as well as family offices from different parts of the world.
Mm-hmm.
Those would be the target segments for us.
So till now, Asian Healthcare Fund has made one investment, which is My Dentist Chain. What is your sweet spot for investments, and what size of investments are you looking at?
We are happy to do investment anywhere between 20 to 40 crores.
Okay. And is there a target that you're trying to reach of a certain amount of companies, certain number of companies you have to invest in year on year?
The way we look at it is that there could be between 4 to 6 investments out of our current size. We are not hung up about that particular number.
So the fund started in 2010 and you made your first investment this year. So were you in the process of raising money, or were you in the process of studying market? How come it took you that amount of time to make that investment?
So let me make a correction for you here. The fund was closed towards the end of 2011.
Okay.
The first closing that we did. What took us longer than what was originally envisaged to make the investment was a very simple situation, that the private equity interest in healthcare suddenly picked up pace in early 2012. And as you see from the data available, the pace has since just moved north. Now that led to a situation where the valuations of the businesses, in our view, started to look unattractive. And of course, second part of the story always is that as you study the deals, you go deeper into the deals, and knowing what we know about the sector, there is stuff that comes through which you don't like.
The first fund you said is about to close, and the corpus is about 38 million. So when do you think it would close? One, and two, by when are you planning to deploy the first fund completely?
See, the final closing is around the corner.
Okay.
So matter of a couple of months. We expect our second deal is on its way, and the balance that we have to deploy should happen all done towards the middle of next year, between now and the middle of next year.
Okay.
So depending where it falls in between there, it may all happen by the end of the year. It may go in the first quarter, second quarter of next year, depending on how things come. We have a pretty decent pipeline of possible opportunities. But then,
So safe to assume it would be deployed either by the end of this year or by the middle of next year?
yes,
Roughly.
absolutely.
Okay. There was this time in 2005, 2006 when a lot of investment was coming, and right now a lot of PE players are finding it very difficult to go for an exit because the money came in but there are not enough buyers now. So something similar is happening in healthcare also, where a lot of investment is being made. So do you think a similar situation can arise for healthcare a couple of years down the line?
I don't think. I'm sure it will happen.
Oh, okay.
You see, investment at the end of the day, whichever sector you look at, whether you're buying land, or you're buying a building, or you're buying a steel business, or any other business, if you have not bought it at the right value, when you want to exit and meet your return expectation, there will be a mismatch.
Okay.
It's simple. It's what the basic core investing principle is. So that's why they always say that you have to buy whatever you're buying at the right value. What is happening currently is, and what has happened in the past, is that businesses have been bought at inflated values. The valuation has been unrealistic. And the challenge of execution of building a business is grossly underestimated. It's a hugely challenging environment to build a business in the Indian setting with the variables that affect a given business. So, if you're lucky, things would fly. But when the lady luck decides to look the other way, then the trouble begins.
A lot of opportunity in tier 2 and tier 3 for primary, for single specialty hospitals, primary healthcare.
Absolutely, huge opportunities.
Right.
And therefore, tailing into those would be opportunities for more cost-effective equipment, devices, drugs, etc.
What do you think about the medical device industry? Medical device companies, or med tech companies as they're also called, are receiving a lot of investment. Goldman Sachs invested in BPL, you have Trivitron, you have Sutures. These companies are doing very well, attracting a lot of investment. What do you think about this industry? Is this industry good to invest in?
This industry is very good to invest in, and it is there to grow. The catch, however, is that some parts of that industry is highly polarized. There are big boys who are deeply entrenched.
Right.
And to shake their market, to shake their market share is not an easy task. Because what they can do to protect their market share, a smaller player will find difficult to match.
Okay. Right.
So one has to be very clever and judicious about selecting the play.
What kind of multiple valuation are you seeing in this business, in the healthcare industry? And it's a very broad question to ask because it has separate segments. But overall, what do you think?
Okay, so to get an answer to this question, I'll tell you the way we see it. First of all, if you take out the big hospitals and the pharma businesses, which are scaled up, where there is an EBITDA to apply a multiple, the other businesses are all subscale in a way, growing businesses. There are, in that sense, if you want to stick a multiple to the EBITDA, you'll have to first locate where the EBITDA is.
Mm-hmm.
So most of those businesses currently don't have any EBITDA. Right? So the valuation for the business becomes a slightly complex task. It's not quite a multiple driven situation out there. It's what you see the business becoming 4, 5, 6, 7 years down the line.
What is attractive in healthcare sector? A couple of things that we have come across is medical tech companies are becoming very attractive investments. Single specialty hospitals are becoming very attractive investments. Just to have a broad idea, what other sub-segments in healthcare industry would you think are very attractive broadly to invest in?
So there is the whole wellness segment that is coming about, which we believe is very attractive.
Okay.
Because that addresses what famously called the consumption play. Right? Again, rising GDP, more affordability, aspirational. So that's another attractive sector. Then eventually, when regulatory issues are sorted out around the whole clinical trial business, that business segment would be very attractive. Currently, it is going through a challenging time.
What is clinical trial?
So clinical trial is where the drugs come in for trials in the country by the companies which help drug companies, pharma companies conduct trials.
Okay.
And they can happen for diagnostics, they can happen for drugs, and so on and so forth. So that segment is an important segment given the diversity, demographic diversity of the Indian population. So that's a very high potential area.
Talking of investment strategy, first question is, would you be looking at Series A funding only, or would you be looking at Series A or Series B or C? What would you be looking at?
We are primarily growth capital. The growth of the healthcare businesses, like I said, outside of the two big segments of pharma and bigger hospitals, the businesses are relatively smaller scale businesses, right? So the simple principle to be applied here is that if the proof of concept is out there and if you like the business, then irrespective of whether that was Series A or B, and if it seems attractive, and we believe that with us participating alongside, the business could become more attractive, then we would invest in it.
Okay.
If we have a choice between Series A, B or C of an equal opportunity, then of course, the earlier you get into the business, the better it is for your returns.
What is your investment strategy? What kind of companies would you be looking at very closely?
See, as with any investment philosophy, the most important element of an opportunity is the promoter behind the opportunity.
Okay.
The gentleman, lady who starts the business.
Right.
Then of course, second is the business itself.
Right.
What segment does it address? What need gap does it address? What kind of capital requirement the business has? And what kind of operating loss situation that the business would need to go through to build up scale.
So operating loss situation, what does that mean? Does that mean the amount of investment that constantly goes in the company before it starts yielding good results?
The operating loss is that you have set up one particular unit. Let's talk about a single specialty situation. You set up one unit, second unit, third unit, fourth unit.
Right.
Now if you were to run just 4 units, that's fine. you will become cash positive, start making profits as the business in each of those units grow. However, if you want to create 30 units more, then whatever you're earning is going back.
Right.
And the next opens, the next opens, and the next one opens. So you need a particular size to be achieved before all your expenses are met.
So the companies that you'll be investing in, is there a criteria that you'll be looking at picking up the majority stake or the minority stake or significant minority? Are you looking at something of that sort? That you only look for majority stake, you pick up majority?
No, we don't have that as a basic requirement. It should be significant minority, and whether it is 25% or 30 or 40, that would depend on individual merit of the opportunity. But we have no criteria of just going for majority stake.
So finally, what are the broad trends that you're looking at in the healthcare business? So we're looking at a few. There are a few that we've come across, that people are investing more in single specialty, less in multi-specialty. Multi-specialty getting high quantum of investments, but high number of investments is going in single specialty. And medical equipment business, something which has come up and is getting a lot of investment. So apart from these, any broad trends that you're looking at right now in healthcare where you can see?
No, I think currently what you said and highlighted is the flavor of the season.
Okay.
Right. Well, that's good for somebody. We don't go by that. For it's not about what the flavor of this season is. For us, it is about an individual opportunity.
Right.
Whatever appeals to us according to our own internal gating criteria will be attractive to us. Whether it's flavor of the season or not is
irrelevant,
of no relevance to us.
Do you see anything happening in the future that this is going to become the next flavor of the season? People will go for this.
See, because philosophically we don't look at it like that.
Right.
So for us to predict the flavor we think it's not a good way to go about looking at your business.
Right.
Right. We look at individual segment and then we try to say that in this segment, what is likely to happen in the next 2, 3, 4, 5, 7, 10 years.
Okay.
Right.
Right.
And then go on that belief.
Okay.
So today, clinical trial is completely out of favor. Tomorrow, it will just become a favorite opportunity.
Right. Mr. Vij, thank you so much for spending and giving us this time, and thank you so much for answering all my questions.
Thank you.
Thanks.